Good day all. Ira Epstein of Linn and Associates with your metals market wrap up for this Wednesday, July 3rd, 2019, about 3:10 p.m. Central Daylight Time. Let me start off by wishing us all happy Independence Day. America's a great country. Nice to have that holiday. As you can see, trading's basically done for all purposes now. And what we're looking at as these markets are just hanging around here is what went on in the gold market. And what I found out, with all the rumors of Vice President Pence called back from an airport, he never did take off. He was about to take off and the White House wanted him back there. We still don't know what that was about. But we do know that President Trump is nominating two people to fill the two empty board seats at the Federal Reserve, and one of them believes in the gold standard, has written numerous articles that have been in the Wall Street Journal about it. That got the gold bugs going. And that's why this market has been on fire, thinking, okay, what influence, if that person makes it onto the board, will it have for America? The other person is very much a dove, thinking that the Fed's policies have been too tight. Two parts to go. You can see the stock market up today, metal market's up, dollar index versus the euro pretty flat in the day, the British pound still lower, and the yen down a little. But it's a holiday, and you've got to remember these are holiday type markets, and as they're trading like this, you get these whips back and forth. Yesterday was interesting in the energy complex because down so much after OPEC decided to go into a 9-month agreement on a production cut. That didn't last very long. You came back with a vengeance today. And the API report was more bullish than the EIA report. I think it was just a delayed reaction. When we look at the gold, we can see we're up about $8 for the week, and this has been one beautiful run to the upside. The market's gone up about $140 an ounce. You can see that the market had a gap here that it's finally filled, and now it's come back up. Will it get through that high or not? It's going to be the question for chartists. The pattern, today's rally, broke that little bit of a downtrend you had. You had lower highs, lower lows. If you took out 1427.80, you break that. And what I look at in markets is how, number one, is it trending or not? Number two, if it is trending, where's the upside or downside going with the market, and what breaks the trend? Well, in this case, 1427.80 broke that. Are you in an uptrend now? Well, you certainly have upside bias, but is the definition of a trend, if you believe in higher lows, higher highs? No, you've got a lower low and a higher high. When we put on the moving averages, we see the market missed getting to the 18-day average of closes. That could have been one of the targets the market was setting up. What about resistance? The upper Bollinger Band is it, and it's near that 1450 area, so this market to me still looks in the bull camp. Momentum-wise, you're overbought. So I have a market that's overbought, approaching again the 1450 level where resistance has been seen before. In the GLD ETF, you have the lower low, the higher high. You're not trending, you're overbought, you have an upside bias. GDX, the market came back today, gets to a high of 2570 over that number right there. And you, by the way, yesterday you took that out too. So we had left the downtrend yesterday, we continued up a bit, but we're not in an uptrend. We have upside bias. You're over that 18-day average, and that's where I determine bias. You're above or below it. But I'm overbought in a market that's been here, done that. It needs a new piece of information, whatever that's going to be. The gold-silver ratio still running in favor of gold gaining on silver, and you can see that the silver market even got high enough today to negate the pattern of the lower highs and the lower lows. Do you see that? Today's rally broke that. Does that mean you're in an uptrend? No. You've had upside bias this whole time. You just haven't, from here you had the trend, then it ran out of its momentum against the upper Bollinger Bands, pulled back to the 18-day average. It's now looking for its new way, wherever it's going to go. In the copper market, a bit of a rally today. It didn't hurt to hear Mr. Kudlow come out today, that's the president's economic advisor, and say that China and the U.S. could sit down at the table and start talking as early as next week. Well, anytime you hear something like that, boy, that'd be good news, so away you go. I don't know that you're going to make it now to that lower Bollinger Band. You've sort of given up that pump in the market to the downside. You have a higher high and lower low, so it's a chop pattern. If you were bullish, you ran out of momentum at the upper Bollinger Band and you didn't go very far. If you were bearish, you couldn't make it down there and suddenly you're back at the 18-day average of closes. In the platinum market, the trend has been bullish. Higher lows, higher highs. The market's running the lower Bollinger Band, but it's got formidable resistance at the 100-day average. I'm looking for the pros to take some money off the table right here, not put it on. The market that's the strongest of the metals, and a broken record in saying it, and I've been saying it over and over, is the palladium market. It continues to gain on the other metals because it's got the embedded reading, the uptrend, and the bias to the upside. Last in the dollar index, you need a battleground, you've got it. You've got your 100-day in the green, your 18-day average. You've had a pattern of higher lows, higher highs. You had gotten down to the lower Bollinger Band here, found the support in the market, came back into that resistance point. Now you're sort of sitting. The pattern is one of lower highs and higher lows. It's doing this. We'll see where this market wants to go, but right now, pretty hard to figure it out. And that's the question that you get. You know, you look at a chart, you see what I'm doing here, but in the morning, I'm able to give it a lot more than I'm able to do in these charts. I really pour over them because if you're like me, you find yourself second guessing yourself. Who doesn't? I mean, there are great traders out there, but they'll question themselves. I know a lot of them. And you started off with ideas, and people read other people's ideas. They look at charts. They're trying to get what's going on. So what I do is I start off my subscribers early in the morning, 6 in the morning. That's Central Daylight Time. I'm recording, and I'm talking about 40 futures charts. They'll be done in the same sequence each time, and 4 or 5 ETFs. The idea here is the charts will look like that. I'm not in these. You get an early morning break with your cup of coffee. But I'm going to be able to talk to you technical analysis, some of the fundamentals, and I'm going to give you points of entry if I see them, exit points, profit objectives, stops, all those type of ideas that you work with. The goal, maybe you're thinking about these markets in some manner and you need that extra push. If what I'm saying is that push you need, great. What if it's contra what you're thinking? Well, maybe that talks you out of the trade that it shouldn't, or maybe it says, you know, I missed that. That's something I need. Any way you go about it, it's another source of thought. And if you keep watching my videos here, there's a reason you're watching them. You obviously like some of the analysis that I'm doing. How do you get it? It's simple. You go to our website, www.iraepstein.com. Go into the area of education or research, morning subscriber video. There's a whole section there. It tells you about how this all works. There is a charge, 26.5 cents a day if you haven't tried it. $7.95 for the first 30 days. After that, it can roll. You can stop it. Anything you want to do. It's $15 every 30 days thereafter, or if you buy a 1-year subscription, $156, which works out to $13 a month. Any way you cut it, you tell me what's going on in corn, gold, any of these. We're talking a fraction of a tick in some of these cases. That's my point. I'm Ira Epstein. You have a good day. Hope you take advantage of this, and I'll see you come Friday.